Welcome back, and you're watching Market Fatafat on ET. Now, let's keep it going with all the stocks that are buzzing in trade, either on the back of news flows or technicals. And on the technicals, now we're joined by Kunal Rambhia joining with us. Kunal, a very good afternoon to you as well. And let's start with your first stock then for today, and that is IRCTC. On the charts, how should one be looking at IRCTC? We have seen a bit of a move consolidation kind of a phase for IRCTC in the last 6 months approximately. Now, what are the charts indicating?
Yeah, hi, very good afternoon to everyone. So if you look at the IRCTC's chart since December 2022, so far this counter has been in the broader zone of around 560 to around 660 levels, and the median level, the average level for this counter comes to around 610 to 615. Presently on the cash level, it's trading at 616. I think this seems to be a good accumulation zone for the counter. We need to keep a watch on it for next couple of days. If it sustains at 616, I think this seems to be a decisive bottom. This can be a good bottom for the counter going forward. The targets on the chart again can be around 645 to 650, and one can keep the stop loss at around 610.
All right, moving on then, Ashesha, let's talk about United Spirits and why this particular counter is in the spotlight in today's trading session.
Stock is in focus for the second consecutive session. Today, of course, it is on the back of a report that has come in from Macquarie, where they are maintaining their stance on the stock. They've maintained their underperformed stance on the stock, and they've given a target price of 700 rupees per share, which is much lower than the current market price of 916 rupees. They say Karnataka tax hike. Remember, this news came in on Friday, and they say that Karnataka tax hike could probably weigh in on the growth of the company. Such a tax hike would drive a 14 to 15% hike in end-level consumer prices, and that could negatively weigh in on volumes as well. They believe brands would want to relook and revisit the pricing of their brands to offset the hit and the impact that they could see as a result of the excise duty hike that was undertaken by the Karnataka government. And they believe that such restructuring could moderate the final price hike to the tune of 12 to 13%. So the news was negative. Macquarie has also maintained its downgraded stance on the stock, and that is what the stock is reacting to. Not reacting much. It has recovered from the lowest point of the day, 0.2% higher in trade as we speak.
Okay, surely keeping an eye out on United Spirits. But let's move on and talk about Colt Powder. And Harsh, why have you picked out this one for us in the list today? What's the news here?
Well, yes, so sources tell your channel that Colt Powder is likely to announce JV for a non-Pune project. Now, RERA approval expected to be completed for Pune's Baner project as well. And non-Pune projects comprise of roughly 20% of revenue now. And the company will be in focus or will focus on the Mumbai as well as Bengaluru markets. That's the other reason why the company is in focus. Q1 FY24 operational update is expected to remain strong. That's what sources tell your channel. Of course, the stock itself has moved a solid 43% from the March lows, market cap of roughly 2,780 crore odd, and it's moved 4% higher in trade today as well. In fact, its FY24 guidance, especially which one suggests that it's going to launch around 30 lakh square feet of sales value of around 2,800 crore odd, and has a turnover target of 8,000 crores. So Colt Powder largely in focus because of the JV with regard to non-Pune projects.
All right, that's Colt Powder for you. That is buzzing in trade. Remember that this is an information that sources told ET now. But let's move on, Kunal, and let's talk about Nalco. We had Summit talk about SAIL, but Nalco, similar performance trend coming in from Nalco as well for the last 6 months, has absolutely done nothing. In fact, 1% downtick coming in on that particular counter. Where do you see Nalco headed from here on? Do you think that now it will actually regain its mojo and we'll see a sharp uptick in this one?
Yeah, so if we talk about National Aluminium in today's trade also, it's positive. As of now, it's just up by around 1%. If you look at the overall consolidation, the counter is rightly been in sideways consolidation, but with positive bias and constantly making higher bottoms also. And last week also, we had discussion about the same counter. It's now seems to be on the verge of breakout. One can keep an eye on this counter above 84.5. I think this counter can quickly go to 88.5 to 89 levels. So watch out for this level. The stop loss can be 82 once the breakout of 84.5 is confirmed.
Okay, keep an eye out on those levels for Nalco. But let's move on and talk about Keystone. Now, this one is in focus. Why? Because we have an operational update coming from this realty player where they're saying that the Q1 pre-sales that came in at around 500 crores, which was around up by around 106% on a year-on-year basis. That is more than doubling over there. Collections also were quite robust. There was at 490 crores, up by 22%. And the company has also launched two projects having a saleable area of around 0.6 million square feet and a GDV of around 890 crores, which is in line with the guidance that the company had spoken about. In terms of business development, obviously those three projects that are which are at 1.1 million square feet, which is a GDV of around 2,500 crores. So let's keep an eye out on Keystone Realtors today, trading with gains of almost 4.5%.
All right, let's talk about a stock that hit a record high in today's trading session, and that is Raymond for you. At one point in time, if you look at Raymond, it was surging approximately 6% in trade, hitting fresh record high levels of around 1,852.15 rupees per share. But right now, it is a bit it's come off those elevated levels. Nevertheless, holding on to good gains. And at 6%, it was the biggest intraday jump coming in for Raymond since April 27th. If you look at the stock, it is gaining for a second consecutive session. Raymond's success in expanding branded apparel revenue and evaluation of ongoing real estate projects are key catalysts for the company's re-rating. This is what Antique has actually written in its note. They've also said that the lifestyle business has potential to grow at around 12 to 13% CAGR over the next 4 to 5 years with 15 to 16% EBITDA. They're also saying that the branded apparels could double over 4 to 5 years on the store expansion and ramp up of their ethnic business is what Antique has to say, giving a thumbs up to this particular counter. And you can see the stock is also soaring, record high levels in today's trading session. And also over the weekend, we also had the annual report come out for the counter.
But let's move on, and Ashesha, Vedanta, that one too is in focus today. What is the news flow here?
Yes, an important update has come in with respect to its semiconductor foray with Foxconn. Earlier, it was not a part of the listed entity. It was housed under the wholly owned subsidiary of its ultimate holding company. But now Vedanta has gone ahead and acquired 100% shareholding in two companies, Vedanta Foxconn Semiconductors Private Limited and Vedanta Displays Limited. So as a result of these two acquisitions that were announced by the company on Friday, this semiconductor foray and manufacturing in association with Foxconn is now a part of the listed entity Vedanta Limited. Now the opportunity is very huge. The semiconductor market stood at about $24 billion in 2022, and it is expected to touch about $80 billion in FY26. As far as the foray is concerned, they've already entered into an agreement with the government of Gujarat. Production is expected to start by FY26, so that is when the company will start generating revenue. But yes, an important update that has come in wherein the semiconductor foray will now be a part of the listed entity. The stock has recovered from the lowest point of the day, and as we speak, it is sitting with gains of 0.7%.
All right, that is Vedanta for you, but let's stick with the metal pack and let's talk about a stock that hit a record high in today's trading session. That is JSW Steel. Kunal, where do you see this one headed from here on? Already at elevated levels, 6% is what the move has been over the last 6 months. If you look at the move, it's not that quite a bit for a steel major like JSW Steel. Where do you see this one is headed from here on?
So if you look at the historical data right from May 2021, this counter tried surpassing the levels of around 750, 770 zone almost 5 times, but it was a failure. And in today's session, what we are witnessing is the counter crossing those levels decisively. And so far, it's trading near to those 805-6 levels. It seems to be the beginning of a new rally from here. It's entering into the new zone altogether. One can initiate a buy on this. Just one condition we need to keep in mind, and that is that for next 2 to 3 days, the counter should sustain above 775. If it remains above that, the targets of almost 875 can be placed on it with the stop loss of 775.
Okay, surely keeping an eye out on those levels for JSW Steel. Let's move on and talk about SBI Life. And Harsh, what is the news flow today around this one? The stock move as of now is quite subdued, but how is the news flow looking like?
Right, absolutely, Vinny. So the stock move is subdued, as you correctly pointed out, and so are the numbers for SBI Life for the month of June. And what we're seeing, therefore, is the growth in terms of individual WRP, weighted received premium, is up just 5% on a year-on-year basis. 1,071 crore is where that number is at. and for the year to date, which is for Q1, it's coming at 2665 crore, which is also a growth of just about 3% on a year-on-year basis. Even when I'm looking at the unweighted new business premium and growth, the numbers don't look very impressive. In fact, the number is actually down for the month of June, on a 13% lower for the month of June, and just about 9.5% higher for Q1 FY24. So clearly seeing some amount of pain here in terms of growth not coming through for SBI Life in Q1. Of course, it's a seasonally weak quarter as well, so you will see some of that, but other insurers are not seeing much of that. So SBI Life, out of LIC, is among the listed players, is seeing some pain on that front.
Surely keeping an eye out on SBI Life. But let's talk about Hindustan Aeronautics, and why is this one in focus? Now, the Defence Ministry actually on Friday had signed a contract with HAL, and this is mainly for the procurement of 2 Dornier aircraft for the Indian Coast Guard, and the overall cost of that is at around 458 crores. Now, what they further highlight is this will further bolster the aerial surveillance capability of the maritime areas and responsibilities of the ICG as well. And the Ministry of Defence said this in a release. So obviously HAL will be manufacturing this in their Kanpur facility. So keeping an eye out on HAL today, giving up those morning gains, doing pretty much nothing as of now in trade.
All right, that is HAL for you. But remember, this has been a high flyer as well of late. But Kunal, let's talk about DB Corp, and where do you see this one headed?
So on the chart of DB Corp, if you look at the recent behavior, it's been a crazy rally right from the extreme low levels of 95 in March 2023 to 162. Now, if you look at the weekly chart, it's crossing the previous all highs, and it's making this 52 weeks high in today's session. The breakout was at 157, counter is trading at 163, so one can start accumulating this counter for the new rally starting from here. The stop loss can be 140, which is almost 20 points away from the present level, so one can think of even accumulating on decline. And the targets on the counter can now be placed at 205 to 210 levels.
Okay, let's move on and talk about stock number 29. And Shari, you're going to talk to us about Aarti Industries today. What is the news flow here today?
So Axis Capital has actually come out with a note on Aarti Industries, where they're saying there is a weak outlook on the revival of the discretionary spends. They're saying it's worse than their earlier estimates of approximately 50, and also they're saying approximately 50% of Aarti's end market is what they're seeing is going to be impacted. They're also saying that the slower agri market and China's aggressive exports would push back Aarti Industries' growth recovery. Therefore, they've gone ahead and cut the FY24-25 EBITDA estimates by about 12 to 14%. They're saying that there will be pressure on the earnings to be given the higher planned capex of approximately 3,000 crore rupees that they have planned over FY24-25 as well, which is partially funded through debt. They're saying while the managements have revised the FY24 EBITDA growth guidance to approximately 15%, there are risks to earnings, giving limited clarity on the growth recovery. So yes, they are not too gung-ho about this particular counter. In fact, they've gone ahead and downgraded Aarti Industries to a reduced from an ad rating with a revised target price of around 470 rupees per share, as against 570 rupees per share earlier. And you can clearly see that note impact coming in on our industry. Stock is down actually at the day's lowest point.
Absolutely, keeping an eye on that one. But moving on to the next one, and Ashesha, seems like you've picked out a few of these IT names for us. It's TCS, HCL as well as Wipro. Why are they in focus?
Well, yes, Nifty IT in fact is the biggest sectoral loser in today's trading session, and all of these 3 IT companies will kickstart earnings season this week. Now remember, first quarter is usually a seasonally strong quarter for IT companies, but this time around expectations are muted. Revenue, in fact, for some companies are expected to see a decline on a sequential basis. Margins, meanwhile, are also expected to contract because of the wage hikes that the company had undertaken in the previous quarter. As far as stock-specific action is concerned, TCS, Jefferies expects buyback announcement along with its Q1 results. HCL Tech, meanwhile, is expected to retain its margin guidance of 6 to 8% and revenue growth guidance of about 18 to 19% that it had given for FY24. Wipro, meanwhile, would report a revenue decline this quarter on a sequential basis. So yes, weak set of numbers are expected from IT Pack this time around on a sequential basis, and all of these stocks are under pressure today.
Right, the IT companies definitely in the spotlight. Come July 12th, busy earning season will kickstart. But Kunal, Inox Wind, how is this one looking on the charts to you? Do you see that up move that it is registered of 79% in the last 6 months to continue, or do you think now it will take a breather?
I really feel it can just continue from the present level. Also, if you look at the weekly chart, a massive consolidation and the consistent resistance of around 160, which was on the chart since July 2017, is decisively taken out last week. And in today's session also, we can see the counter is up by around 9.5%. Any decline from the present level to the tune of 160 to 165 can be a great buying opportunity. I think this is a complete turnaround story on the chart, which we can see. One can initiate a the present level also, one can accumulate even on decline. The positional stop loss on this can now be 145, and I think this counter can now show us the levels of 225 to 230 very soon.
Okay, let's move on and talk about the next stock, and that is Harsh from the FMCG pack. You've picked out Marico for us. What is the news flow here today? Why is this one in focus?
Well, yes, so Vinny, we've got a Macquarie report which continues to give a thumbs up to Marico outperform rating given to them. They believe that Marico, the pre-Q1 was better than expected and margins will offset the weaker sales commentary that's come through. They're expecting a 10% EBITDA growth in Q1 of FY24. That's a positive as well. And they're expecting that margin strength will drive a 4% increase to FY25, 24, 25 as well as 26 EPS estimates. So on the back of that, they've hiked their target price. 580 was their earlier target price. They've hiked it to 620. You can see a good move on the stock, 2% higher in trade today as well.
Okay, let's move on and talk about the next stock that is in focus, and we have Max Ventures that is buzzing in trade. And why is that so? Because what happened is Max Estates, real estate arm that is of the Max Group and wholly owned subsidiary of Max Ventures and Industries Limited, has announced that it has achieved a formal launch sale of 1,800 crores in its luxury residential project. And this estate is 128, located in the sector 128 of Noida, built in 10 acres of land that they have over there, with 3 high-rise towers and 201 units. Already managed to reach that 1,800 crore mark for this luxury real estate and residential property that they have. So keeping an eye out on Max Ventures. It was trading with good gains. As of now, also subdued gains coming in. 8 tenths of a percent uptick there.
All right, moving on, Kunal, let's talk about New India Assurance. Actually, very rarely we've seen anyone actually talk about this one, but this has a silent mover on an intraday basis if you look at the stock price movement coming in for New India Assurance. But over the last 6 months, this one has done absolutely nothing. 6% downtick coming in on this one. Do you think the consolidation is done? You will see a breakout soon?
So my first buying actually on this counter was near to, on 2nd of May, that was near to around 107. And what we witnessed was on 4th of May, the counter went up by almost 15.5%. And since then, this counter is in sideways consolidation. Now, if you look at the chart formation, it's still positive. The sideways consolidation is definitely on chart, but the trend is still intact. That's positive. The strong support on the counter is around 114. And today, it's trading at around 120 to 121. Now, looking at the volume activity since last 2 days, I think this consolidation may just come to an end anytime soon. One needs to wait for the breakout of 123. Above 123, one can initiate a buy. I think the target can straight away be placed at 135 and the stop loss can be 115 for that.
All right, so that is New India Assurance for you. Let's talk about Kajaria Ceramics, and why is this one in focus? Because Haitong has come out with a note on Kajaria Ceramics. They've initiated their coverage on this particular counter with an outperform rating. Also, they've given a target of around 1,400 rupees per share. And on back of that particular development, you can see the stock actually seeing a good uptick. Let me give you the finer details on what Haitong is actually saying in its report on Kajaria Ceramics. They're saying they initiated a coverage with an outperform rating, target of around 1,400 rupees per share, which implies a potential upside of approximately 13% to the last closing price of the counter. They're saying the company is an undisputed market leader in the tile sector in India, with a key focus to sell in the domestic retail market through established distribution and network. So they are also saying that the revenue, EBITDA and PAT is expected to grow at around 13.7% for the revenue. EBITDA, they are expecting a growth of about 23.8%, while for PAT, they're seeing a growth about 26.1%. This is CAGR over FY23-25. in anticipation of a gradual recovery coming in the domestic tiles demand, as well as margins restoring back from the multi-year low. So yes, they're pretty gung-ho about this particular counter, giving a target of 1,400 rupees per share, and the stock also reacting positively to that.
Keeping an eye on that, but let's move on and talk about Gati at stock number 36. And Shesha, what is the news flow that you picked up today for Gati? Why is this one buzzing in trade? 5% uptick as of now.
Yes, strong operational updates have come in, and that is the reason we saw that sharp uptick that came in intraday basis. The stock, of course, as we speak, is up over 5%. Total volumes have seen an uptick of about 14% on a year-on-year basis, and on a sequential basis as well, they are up 3%. Volume performance in June continued to be built on strong momentum that we've seen in the month of May, and that momentum continued for the month of June as well. The company has seen pickup in orders from large customers. They say this is ahead of the festive season, and the company expects the momentum to continue in the coming months as well. So strong operational updates, volumes up 3% on a month-on-month basis, and the commentary is quite strong with respect to momentum continuation in the coming months, and that is the reason the stock is gaining in trade today.
All right, that is Gati for you. But Kunal, let's talk about Eicher Motors, and this one definitely competition is actually creeping in for its undisputed area for his Royal Enfield. With you also have Hero also trying to come into the category. Bajaj also, you saw the stock actually bear the brunt of it. You can see it on your line graph as well. But the stocks has actually not given much of returns over the last 1 month or even 3 months for the matter of fact. And 6 months, as you can see, 1.9% uptick. Where do you see Eicher Motors headed from here on? Do you think that now it is poised for a breakout, given the fact of a very lackluster performance?
So certainly not the breakout, but if you look at the overall behavior of the price action, somewhere in the month of June, we saw the counter trading near to 37.50, and from there it's down by around 15% as of now. That's trading near to 3,200 kind of levels. And now this is the level where actually counter made a bottom somewhere in April. So for the long side, this counter is offering a perfect risk-reward ratio. See, we all know the announcement behind this, but at the same time, the price is near to the support. So one can definitely take a chance to go contra based on the behavior. One can initiate a buy at the present level, keep the stop loss of around 31.40, 31.50 kind of zone. That's around 1.5% from the present level. If this turns out to be the final bottom, from here we may see the recovery and the counter may show us the levels of 3,400.
One's up to you.
Okay, keeping an eye out over there for Eicher Motors on this levels. Let's move on and talk about RVNL and Harsh. Why is this one in focus today? What's the news flow?
Yes, it's been chosen as the preferred bidder for a rehabilitation and upgradation project from 4 to 8 laning with regard to a 4 to 8 laning project, I beg your pardon, in Odisha. The project cost is roughly 809 crore, which is also quite good. The time period roughly 2 years for execution, and when you're looking at the top line of RVNL, roughly 20,000 crore top line, so around an 800 odd crore order, quite a decent win over a 2-year tenure, definitely a positive, mildly higher for the stock, 0.5% or so higher in trade today.
All right, that is RVNL for you. But Kunal, Tata Steel, where is this one headed from here on? Yes, metal sector was pretty upbeat in trade today. But where do you see Tata Steel headed from here on?
If you look at the Tata Steel behavior right from September 2021 so far, it's actually forming a massive symmetrical triangle formation, which we consider as the consolidation pattern on the technical trend. Now the breakout of that is placed at 116, and right now the counter is trading at 115.5. I think the new rally is about to emerge on this counter. One can initiate a buy on this counter above 116. We'll be waiting for the closing, of course, and keeping the stop loss of around 112. One can place the target near to 130 to 135. That's going to be a positional trade. We'll keep sharing with our viewer on the regular time interval, but the buying above 116 with the stop loss of 113.
All right, that is Tata Steel for you. But let's talk about another Tata Group company, and that is Tata Motors. It hit a record high in today's trading session. It saw an uptick of as much as 2.7%, hitting a record high of around 634.8 rupees per share. The company said that the global wholesale number for JLR in Q1 was at around 93,253 units, which was an uptick of approximately 30% on a year-on-year basis. So yes, they had this healthy update coming in for their wholesales data as well. But today, you can see, the stock has given up those morning gains, and the reason for that is Hyundai has actually launched an SUV which is in competition to Tata Punch. So that also could be a reason why the stock has actually given up those morning gains. 8-10% uptick coming in for Tata Motors, but let's not forget the fact stock hit record high in today's trading session.
Surely, and that was stock number 40 for today, and that was the last stock that we were going to be taking today on this edition of Market Fatafat. Thank you so much, Kunal, Samit, Harsh, as well as Ashesha for joining in with us, and thank you so much, viewers, for tuning into ET Now. It's a goodbye from Cheryl, myself, as well as team who put this show together.